Hello and welcome to another update video about Natgas as we're heading into the weekend. This week was, I would say, rather quiet for Natgas. No surprises. Actually, the analysis, unfolded nicely. We're going to talk about that now. Going to talk about the relevant levels, the resistance area, the support area, and what my primary and alternative scenarios are. So let's start with a look at the bigger picture here. We want to take a look at this decline that started in October last year. It is a 5-wave move down that is projected. At the moment, we have seen a 1-2 setup, a 3rd wave down, possibly a 4th wave rally is next, and then a wave 5 down. And this means that I have no evidence at the moment that this long-term low is already in place. I assume, however, that we're very close to a long-term low on the Natgas chart, but it currently looks as if we still get one more low or two more lows. The idea is that we get two more lows. That's at least my preferred scenario. In the alternative, it's only one more low. Let me explain. In the preferred scenario, we are basically now in this 3rd wave to the downside, which started at this top on the 9th of January, which formed at around $3.43. The idea is that the move down here is an ending diagonal, so that this entire pathway to the downside that started in October last year is an ending diagonal, which is characterized by overlapping price action and corrective subwave structures, which means that, for example, the 3rd wave to the downside there is an ABC structure, A wave, B wave, C wave. We are now in the C wave to the downside and completed already a 1-2 setup. 3rd wave down, which was the swing low middle of February. 4th wave rally was expected and the price rallied into the resistance area, which was specified. And we got rejected there, which was expected, and got a reaction basically, and left the resistance area to the downside. So all of that is going well at the moment. And at the moment, we seem to be on our way to one more low in circle wave 5. What do we need to see for that? So the idea is in the preferred scenario that circle wave 5 is unfolding off the larger degree 3rd wave. Let me shift the wave labels a little bit. And based on target measurements from previous videos, we would be looking at an ideal target range for circle wave 5 of the larger degree 3rd wave to reach the area between 145 and 129. And this 5th wave to the downside, that's, there's no evidence that something else is going on at the moment. The price structure is confirming that at the moment. It would be further confirmed if we get a break below $1.61, followed by a break below $1.58, and then followed by a break below $1.52. These swing lows are important and this support area here. And then we should get into this region there and possibly then see a bounce in wave 4 that should take the price to the top of the price channel, and then one more low in wave 5. That's the preferred scenario. So this support area, you might ask, what's that for? Well, it is for the alternative scenario, and also a break below this support level at 161 would be additional confirmation that this wave 5 to the downside is actually unfolding. So I only put that onto the chart to give you an area to watch. The price this week has been consolidating in this area. And before we dive into the alternative wave count, let's talk about the structure here. I mean, you see we had a bit of a trend line there, some kind of a trend line. We had a break below the trend line, a retest from below, which is actually confirming the short-term bearish scenario for now. And all it needs now is a break below the previous swing lows and then the previous ones that I mentioned. Okay, in an alternative scenario, we already completed wave 3 here, middle of February. And we'd be in this wave 4 right now. So we are in a larger A, B, C structure. And in this scenario, we're currently pulling back in a B wave with a support region between $1.61 and $1.74. So that's the previously communicated support area for this scenario, out of which a C-wave rally could emerge. And it could take us to the upper boundary line of the trend channel. But for this scenario to remain a reasonable expectation, the price needs to hold the $1.61 level. It's not what I prefer. It's not my preferred scenario, but honestly, I am fairly neutral about them both, because are they really different? Not so much. In one scenario, we make one more low, then get that fourth wave rally, then one more low. And in the other scenario, we are now in that fourth wave rally and then get one more low. So they're very, very similar. It's not that they are, very different. So, but yeah, that should give you all the parameters to watch also for next week. So hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you're interested in daily updates about the S&P 500, as well as regular updates about stocks, then feel free to check out our stocks and S&P 500 service. You'll find the link in the description. Thanks a lot for watching. Bye-bye.